Monday, July 6, 2020, Maneco 64, home of alternative economics and contrarian views. Today I want to talk about how speculation and gambling is one of the symptoms of loss of confidence in the currency, especially fiat currency, of course. Gold and silver as currency never really lead to that kind of phenomenon. And I'm going to touch upon the Weimar hyperinflation, German Weimar hyperinflation, and also the hyperinflation in France right after the French Revolution, fiat money inflation in France. And why am I looking at this? Well, because I think we could be facing the same thing today with all the creation of fiat currency we're seeing from the central banks, especially the Federal Reserve, the ECB, Bank of England, Bank of Japan, and many others. We're seeing more and more people, even young people now, turn into speculation because it doesn't pay to do anything else. Speculation is easy sometimes when you get it right. And especially when you're getting free money from the government, as people are getting now. So let's look at this and then quickly look at the markets. It's a little earlier today. I'm going to have to go out later on. So first, let's look at the German hyperinflation in 1923. And this is from Business Insider. It's an article from 2011, so it's an old article. And it says, here's what happened to stocks during the German hyperinflation. So let's go through this. This is from Joe Weisenthal. It says, since everyone is so obsessed with money printing and hyperinflation and the lessons of Weimar Germany, JP Morgan's European property team, led by Harm Meyer, has published a big report on the behavior of various assets during hyperinflationary periods. Of course, we didn't get the hyperinflation yet, but I think we could very well be on the route to hyperinflation. And it will be measured versus gold and silver, of course. That's why you need to keep an eye on the price of gold and silver. The higher those prices go versus the fiat currency, that means those fiat currencies are melting down or being hyperinflated. And why is that? Well, because as many of you know already, gold and silver have been a stable store of value and money for thousands of years. And they're the ultimate measures of real value. This part of the report on what stocks did caught our eye. This is what Business Insider says. During Weimar, the German population started to speculate in stocks from When Money Dies. This is, I've got that book as well, From When Money Dies, but let's look at this quote. And this is what I find interesting. Speculation on the stock exchange has spread to all ranks of the population, and shares rise like air balloons to limitless heights. The population was now engaged in evading taxation and devoting their money to speculative purchases. Nothing else paid off, so that's why they had to do this. Shares in respectable concerns, which had paid a 20% dividend, were pushed higher and higher till the final holders could not expect a return of even 1%. Sounds familiar. So I'm not going to go through the whole thing. Here's the chart. I think I've shown this chart before. The black line is how the stock market did in German marks. So you can see that it went from like a hundred, well, just above 100 there in January 1920, and it ended up at 100 billion or so. Did people become rich from that? No, because the German currency collapsed and was destroyed. And you didn't know what you're going to get in return for your investment in the stock market, if you got anything as well. They did a comparison to what the stock market could have done in dollars. And yes, it looks like it did well in dollars. We went from around 10 on the right-hand scale. In 1920, it dropped to below 5. towards the end of 1922, and then it rose all the way to 40 and then back down to around 27. You have to remember that back in 1923, the dollar was as good as gold. It was gold. So this is the German stock market versus gold. But very few people had dollars in Germany. So for the small investor, the people who were speculating in Germany, I don't think it really matters what the stock market did in dollars. What we need to remember is that they couldn't convert their holdings in the stock market into anything. They had to probably wait until the new Rentenmark was created later on, I think in 1924. And so this is a symptom of the end of the currency, in my opinion. And the same thing happened in France. Here on page 28 of my Fiat Money Inflation in France, I highly recommend this book by Andrew Dixon White. I'll put a free PDF below. You really need to read this book. It's not long. So this is what Andrew Dixon White says. Now began to be seen more plainly some of the many ways in which an inflation policy robs the working class. The other thing I would say, if you look at the Fed figures from the Federal Reserve Board of Governors, I think it's the top 10% own like 80% of all the wealth, and in the stock market is pretty much the same. The bottom 50 has almost no holdings in the stock market, so they won't be able to protect anything in the coming hyperinflation, in my opinion. As these knots of plotting schemers at the city centers were becoming bloated with sudden wealth, the producing classes of the country, though having in their possession more and more currency, grew lean. In the schemes and speculations put forth by stock jobbers, there you go, those are the speculators, and stimulated by the printing of more currency. Sounds familiar? Multitudes of small fortunes were absorbed and lost, while a few swollen fortunes were rapidly aggregated in the largest cities. Well, that's the 1%. Really, this is who's going to benefit. And even then, I think a lot of them are going to lose fortunes, the 1%. I'm sure some of them are preparing with precious metals for this. This crippled a large class in the country districts, which had employed a great number of workmen. In the leading French cities now arose a luxury and license which had a greater evil even than the plundering which ministered it. In the country, the gambling spirit spread more and more, says the same thoughtful historian whom I have already quoted. What a prospect for a country when its rural population was changed into a great band of gamblers, while you can replace that for an urban population instead of rural nowadays. And just before I go and look at the markets, I want quickly to show you this story here. It's in the Daily Telegraph, and it says, windfall, bankers gorge on £11 billion COVID debt fees. So there you go. Those are the people who are benefiting from this. The people who were probably going to go bust if they hadn't brought all these schemes from COVID, if they hadn't bailed out the repo market back in September of last year. This crisis is ongoing. This is who's benefiting. And now in the UK, they're talking about the fact that people can't have cash like they can in the States. And am I saying that's right, that the government should give people cash? No, but the bankers here are so much in charge that they don't want people saving. They want people spending. So if you're going to get cash from the government, it's going to be in vouchers so that you have to spend it. And the voucher will probably run out in a month or so, or maybe 3 months. So let's quickly look at the markets. It's 7:12 a.m. London. So we've got spot gold is pretty steady. we're trading at 1774, which is down about $0.50, so not much change there. The high's been 1777, the low has been 1770. Silver is unchanged at 1804. Range has been 1793 to 1810. And the stock market, the Dow future, up 430 points for some reason. I know many of you agree with me about this crisis, that it's much more of an engineered crisis, but be as it may, with all the uncertainty hanging over the economy, over people's psychology, with all the talk of second wave, you would think the stock market would not be doing as well, even if things were normal back before 2020, how they were. What the stock market is doing is unprecedented, I think. S&P 500 is up 44 or 1.4% at 3173. The NASDAQ 100 futures at just below 10,500, up 130 points. What about the fiat currencies versus the dollar? Well, sterling is virtually unchanged, just below 125. The euro is up actually 1/3% at 112.89, and the dollar is up 0.15 versus the yen at 107.67. Crude oil is picking up, WTI. We're up at 40.66, up almost 1%. The bond market, the 10-year yield is rising. It's up 2 basis points at 0.69. I still think that's relatively low considering what we're seeing in the markets. So there you go. Still a sign that bond investors are not too convinced about the economy and the markets. What's my strategy in these crazy times? I'm staying out of the general stock market. Yes, I do have holdings in the gold miners, GDX and GDXJ, and I'm going to hold on to them. As I've said before, the commodity space is hugely undervalued versus paper assets. And I think that's going to change. And that's going to be another signal of hyperinflation when tangibles start doing well, because more and more people will want to have tangibles. Not everyone has access to the stock market or wants to go into the stock market. So during hyperinflation, people want to get rid of the currency. So that's why I think tangibles are good. That's why I have GDX and GDXJ. And of course, I try to stack precious metals as much as possible. So there you go. Don't be fooled by the stock market. That's the only thing they can use right now to buy votes, not only in the US, but in other countries. They can show people, oh, look at the stock market, how well it's doing. That means the economy is doing well. But people know the economy is not doing well anymore. So it's a farce, really, the stock market. And I would be very cautious. Yes, you can invest in companies you believe in and you know a lot about. That I'm not against, but the speculation is very dangerous. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, Parlay, and all these other platforms below here. I wish you all a great start of the week. Take care. Bye.